Well, the major averages ending the week on a seriously high note. The Dow rallying in 218 points, crushing through all kinds of resistance points. Danielle DiMartino Booth is with me now. All right, well, you were with the Federal Reserve. You're a former Dallas Fed advisor. The big news this week was the European version of it, the ECB. I mean, they threw in the kitchen sink with Mario Draghi. I don't know if you can get more creative. People put their money in the bank and then they pay the bank to hold on to it.
The bazooka just keeps getting bigger and bigger. It does.
But what's the consequence of this? What's the ultimate consequence of this?
Well, next stop, we'll look to see what Japan does. I mean, this is a full-blown currency war. And in currency wars, you have to see what the next point of retaliation is going to be, what the next government's going to do to try and offset their own currency getting stronger.
Isn't the irony here, though? I think this week, I think the yen is up against the dollar and the euro is up against the dollar. So if all these extraordinary measures continue and they don't work, why do they keep doing it? This is what people are really angry about. You talk about, particularly in America, the resentment over the government and the Federal Reserve, which is not accountable to anyone.
Nope.
Your people.
My former people.
Your former people.
Charles.
Where does it end? Does it have to end in disaster? Because I don't think they'll ever change their tune.
Look, the stock market rally in the United States is the third longest since Standard & Poor's has been tracking rallies. In 2 more months, it'll be the second longest. And I started to hear people talk about whether this is kind of a parallel to 1998. And if central banks keep trying to force this rally to continue, if we could end up with something that looked a lot like 2000, and those were not good times. But there is this pushback that you talk about, that central banks are not all powerful. And if we lose kind of our confidence in these wonderful central bankers,
I don't think anyone has confidence in them anymore, though. I honestly, I mean, think about it. If you print $3 trillion and the needle doesn't move, I mean, outside of student loans and a few car loans, Main Street hasn't seen this money. They're not taking the bait. So,
I mean, you've seen the data on median incomes.
The so-called velocity of money circulating and the economy keeps going down and down and down. Every economic data point that we want to see Main Street sort of coming to life, it's not working.
No, it's not. If you look at what the central bank is doing, it's kind of like a dog chasing its tail continuously. You get a little bit of a rally in the market. Then the market says, oh, gosh, there's another rate hike coming. And then the dollar strengthens. And then, whoops, the market falls off all over again, and then the Fed pulls back. This is ridiculous. Central bankers around the world just keep on pushing on a bigger and bigger string.
Is our Fed doing some of this because they're trying to back President Obama? Are they trying to sort of push the stock market, trying to push the economy despite the risk, and so that a Democrat is reelected? That's one of those theories.
I do think that it's not just pure perception. I think that the Fed has become an overly politicized institution, and it's supposed to be completely objective, completely apolitical. But then you pick up the paper and read about Fed governors making contributions to the Clinton campaign, and it makes for very bad optics.
And we've heard some speeches from Janet Yellen, and she sounds like 100% progressive at heart.
Well, look, I'm not naming names, but one of them drives into the parking garage at the Federal Reserve with his Obama sticker still on his car.
And he's driving a Volkswagen Beetle. Thank you a lot, Danielle.